All right, check 1 2. Check 1 2. Got the mic happening. Fantastic. Hi everyone, and welcome to another end of week market breakdown. Happy Easter. It's Easter Saturday in some parts of the world. So I want to talk through the DAX and talk about the FTSE, and if I've got a bit of time, I might go through some other instruments. Let's kick it off with the DAX, shall we? So Saturday the 19th of April. So we've got a week and a half left on the monthly chart. We had a bull channel. These EMA, this is a 20, this is a 200. So we broke out of a bull channel. And what I said here was, these are the best bars basically in this entire bull trend, apart from these two. And that's typically what happens at the start and ends of trends. It's obviously not always as clean as this, but this has a chance to break out of a bull channel 25% of the time and then get a measured move up. But 75% of the time, this fails within 4 or 5 bars. We go and revisit usually the middle of the channel and often poke out the other side of the channel. Now, we've actually done that all in 1 bar. This bar, when it formed, I said this is a really concerning bar for the bulls. What it does is, even though it's a low probability sell, that's a bit hard for everyone to see, isn't it? That's what we want. Even though it's a low probability sell, it's a 2R sell back to the moving average. If you sold 1 tick below that bar, your 2R target was exactly where the monthly bar went to. So it tells you it was a low probability trade. We also broke the last swing point. Maybe the swing point's down here, maybe it's down here. Puts the market into a trading range. And this is an important entry bar for the bears, although I think a lot of them already scalped out. So likely we're in a trading range on the monthly chart. Now we can see the same pattern on the weekly chart. Let's zoom in. So now we've got a bull channel, so same thing applies. 25% chance that we're going to break to the upside and get another breakout. So basically, whatever this leg is, have another move up, A, B, C, D. At some point, bulls switch off by the close. So we buy the close, buy the close, buy above, outside bar. So breakout, pullback, essentially a high one. This is a high one. This is a high one. So we've had 3 high ones, and we know the low of the range is down here. We can see bars are closing back in the range of prior bars, tails. Traders are taking profits on this chart, and it might be more appropriate to enter on a pullback. Oh, sorry, that's going to replay it on the 5-minute. Second. So weekly chart, nothing to sell. We're sideways to up. 1, 2, 3, 4, 5. And then we've got a weekly bar that closes on its low. So if you're long and you see that, okay to exit and wait for a pullback. Can you short it? For me, I wouldn't usually short just yet when it's strongly always in long. Yeah, it's 3 bear bars. I think it's good enough to sell out of a long, not usually for me to enter. Those bears have a really good entry on Monday, Tuesday, Wednesday, Thursday, Friday. So now you've got weekly bears that have had a fantastic sell. Same again, they hit a 2R target, sell the close, selling 1 tick below, and all the bulls here have been stopped out. So if I take the highest by the close up there and project it down, That's the possible measured move target. Hi to those that jumped on. Welcome. Hope you're having a great weekend. We're just running through the weekly chart on DAX. What do you do here as a bull? Well, all the bulls have been stopped out. We went through a couple of swing points. Not a great buy signal. So it's either sell, sell above, or wait. We hit that measured move target. 1, 2, 3, 4, 5. Now what do you do here? We've come back to the center of this channel, which is what we said earlier. That was a target. The other side of the channel was a target. We've hit all of those and we've got a doji bar. So if you're a bear, it's not really good enough to sell down here, but you've got traders looking to sell and sell higher. You've got bulls that bought the moving average and that swing point looking to scale in. They got back to their entry. So I think bulls are going to exit around this price. And then if we get out of that weekly chart, now we are back to today. So that's kind of the setup that I thought was relevant on the weekly chart. We had a possible breakout of a bull channel. We know it was low probability. You get a potential reversal signal. If you took it, great. If you didn't, and you get this bar here, possible scalp, but you can see anyone that sold here, you sold the close, you had a potential chance to exit. If you sold below that bar, you're currently holding a losing position. Now, do I think these bears are going to lose money? Not really. This is not a great place to buy. We're testing the swing point. This is strong enough to expect a second leg sideways to down, even if it's one bar. So I think at a minimum next week, we're going to have a bit of up, a bit of down, and we're going to let these traders out. So that would be 25 and 20,900. I think we'll visit. Not a great buy signal. We're below the moving average. It's not always in long. So I would usually take the fib tool. The simplest way to use the fib tool is just 50-50 and say, do I want to buy and put a stop down there, or do I want to sell and put a stop up there? And that's the easiest question, I think, to ask. And if you can't answer that question, hey, no trade, no worries. There'll be more bars. But I think you'd be better off selling and selling higher. If I was a bull, then I think the buy is down here. But usually once a wedge breaks down, you get a couple of legs. Why 2 legs? Well, you often, I think, say the buy didn't work. I'll give the bears a chance to do something. And okay, well, they've got something. Now they probably need a second leg of that something. So I think we'll go sideways to down on the weekly chart. Let's get rid of some of the, actually, let's keep it on the daily chart. If you've got any questions, feel free to put them in the chat. I'll move this channel back. Let's keep it fresh. So same patterns apply, market's fractal. So it was easier to get out of your long on the daily chart. Just too many bear bars above the moving average, too much overlap, and not enough reason to buy above things. And this was the key bar. I thought, here's a breakout pullback to the moving average, and there are more sellers above that bar. So the moment you see that, yeah, you can look for a high too, but that's often the start of the trading range price action, and usually chasing it down to a high 2, high 3 is a bad idea. Bulls have probably lost control. We get below the moving average. Do you want to repeat the buy here? Probably not. And you can see we didn't even get above that bar. So if bulls are buying pullbacks, and you can apply this on the 5-minute chart. New high, breakout, pullback. There should be traders buying the close, buying above. Okay, immediate gap. Can we get a new high? We don't get a new high. We come back to the same price. What happens at that price? Okay, we try again. Will traders buy above this bar? Okay, and that's the problem bar right there. It's an outside bar. We've gone above, we've gone below. No more buyers. If this is a bull trend, breakout, pull back to the moving average, there's buyers. There's buyers. They'll even buy the close of this bear bar. Buying the close of this bear bar here. First close below the moving average, they just hit buy the market. Here's a bear bar they bought above. So the behavior is changing. If you can't buy above things, then you're probably better off either waiting or getting short. Those traders that bought there, did they have a chance to get out? No. So I think studying reversals and transition points will give you a feel, not necessarily for avoiding trades that don't work, but I think getting out of them when they're not performing earlier. So you're going to reduce your the size of your losers that way. Now you've got a bear spike. Now you've got the first close below a new low. And this was the end of the month, and then it started getting a bit parabolic. So same thing again, another bull bar, nothing to reverse. If we go below there, traders start selling. So let's go, what was the last day? I think 12th. Okay, 7, 8, 9. Okay, let's play it bar by bar. What do you do here? Big bull bar, closing near its low. Sorry, big doji, but it's a bull bar. It's not going to be a great sell. It's probably going to be more buyers below that bar. Doesn't even trigger. Bear bar up near the moving average. Well, I don't want to sell in the middle. I want to sell above. Traders trying to sell the low 1. Traders trying to sell the low 2. This was an inside bar. So technically we've gone above it and formed a trading range, but you can see the bars already that there's more trading range price action. Bad place to sell. You probably want to sell up here. We've come back up to the buy zone. And this was kind of the interesting price action, I think, across a lot of markets, you know, particularly ES, FTSE. FTSE was, I think, a bit more straightforward, but DAX and ES, we had similar price action. G'day, Atomic. Hope you're well. Happy Easter. Hope you're having a good weekend. Just running through DAX on the daily. Now, I don't think TradingView is a great program to trade off. I think it's a fantastic charting program. It also has some really good features in terms of bar replay and this thing called random bar. And I'll do a little video on how I use that. I think it's just a phenomenal way to practice. They've set it up so it randomly picks a new day in the past 10 years and starts at bar 1. So if you trade opens, man, it's a fantastic tool. And the program's free. So it's unreal. What do you do here? So to buy, even though you've got a couple of bars up, there's probably going to be sellers somewhere above here. Can't even go one tick above there. Now you got an inside bar. So you're probably going to find sellers moving average above. Anyone selling here has got to stop up here. Why would you put your stop all the way up there? Because unless that stop gets hit, this is still either something bearish or a trading range. But taking, hugging your stop here or here is just not going to tell you anything. We could run that stop with a doji, get a bear bar and sell off. Wedge bear flag. So I like to put my stop somewhere where I can learn something interesting. So that was Friday's bar. Interesting, right? That's why I was playing it bar by bar. So for the bulls, they've got a bull micro channel. All these bars are small. They're overlapping, they're tails. That's an inside bar. So there's really nothing that's going to make me buy above that bar. I'd be surprised if we didn't gap down. In a trading range, the signal bar is less important than the location. So for example, this is a bull inside bar. Even if this was a strong bear channel, even if that was a bull inside bar, traders would still sell below it, still a low one. But in a trading range, no, I don't want to sell down there unless I'm also willing to sell up here. So it's a possible sell signal for DAX, but because of the sideways price action, wouldn't be surprised if we go above the moving average one more time. We're now in between the 20 and the 200, so anything that goes sideways like this is pretty expected. How'd you go last week, Atomic? Let me know how you went. So I think we're in the upper third of a trading range, similar to a lot of other charts. Looking at the etc. trading hours, it's a sell signal for DAX on Monday. But because, if we were to zoom in, you can see how tight this is. We know if we zoom in there, we're going to find a bull channel. We go down to the hourly chart. Surprise, surprise. But at the moment, the bears need to do something below the moving average. They need to, what's the word? Convince bulls not to buy pullbacks. At the moment, pullback, buy, pullback, buy, pullback, buy. Even though it's not going very far, bulls are not losing any money here. This was a great place to sell. You see a very strong bear spike in a bear trend. There's going to be scalpers sitting above there. And that's because you expect bulls to wait for it to be breached and pull back and then try a second time. Atomic saying I made a little progress. Great. That's all we need. Steady progress. Learning market structure. Yeah, there's a lot of nuances, and I think understanding spikes, pullback, channel, trading range, being able to see it on multiple time frames. So let's get rid of all this for a second. Here is a spike. Here is a pullback. So I was short DAX here. I think I was short here, and I added here. And it took 2 days for this trade to work. But same thing, spike, pullback, I'm expecting a channel. I was expecting 1-to-1 of this bar. It got follow through, so I sold the test. And I thought, man, if I was a bull, as if I would buy above that bull bar. So I was like, I need to be doing the opposite. And even though we went sideways for many hours, I'm trying to improve my 60-minute chart swing trading, and I thought that was a good one. So that spike pullback channel exists even though there's an opposite one, which is here. Here's a spike. Here's a deep pullback. Now we need a new high. So the bulls see it as they got a new high. Now we're in a channel this way. Something like that. Maybe it will turn into something like this. The important thing is that both can exist at the same time. And this is where the odds go down to 50-50, because are we breaking out of the bull channel? Is it a double top? When it gets to an area where both traders have a case, this is where swings set up. And so swing trading is really difficult, I think, because you've got to say, well, could be going up, could be going down. This is better for a swing trade now, not for scalping. Tomic's saying, but you also know this is like a minor, right? Cannot hold it for too long. The short. Yeah, absolutely. Because of this. So I know So I didn't put an order. You know, harmonic traders would just put an order up there. I don't have the skill or hit rate to do that. But 2 legs up, we hit it, strong sell off. So when I see that, I think, well, we're probably going to do 3 legs. Now the third leg can often be like this, can be cut in half. But I was just expecting 2 legs sideways to down, similar to what I was saying about the DAX on the higher time frame. Bulls exit a trade, they wait for a couple of legs, get back to the moving average, and then this. So there's an ability to trade counter trend in there. If your hit rate on your trend trades is good, then you can kind of sprinkle them in, see how you go. The important thing is not to stick to a counter trend trade and keep trying to scale in, because now you did something you weren't meant to, which is trade counter trend, and you can't scale into it. It's like, okay, I'm only taking that trade so I can get my timing right for the trend trade. Tomic's saying that third leg, whether it's long or small, is based on the momentum and the opposite reversal. Yeah, absolutely. And at the moment, that's a really good point, mate. This reversal is not strong. And if you look at DAX on the weekly chart, this is not a good example, because in the same bar, bulls have got out and bears have shorted. So it's a bit more difficult to see that. 3 opposite bars in a row. This is not something that the trends have. First set of 3, this is not a sell. Second set of 3, still not a sell, but trading range price action. So that reversal, I think the common mistake is to sell this bar, because you're like, oh, I don't want to miss out on the reversal. But you need to be able to move that to this bar, which is breakout, follow through, first pullback. There's the low 1. So difficult to sell the close of that bar, but selling a new low, it's a low 1 sell, that's the better short. And that means if the market then resumes, you never get your entry, which doesn't cost anything. Nice. So that's DAX on the daily. So we're in a tight channel going up to the moving average. I think we're going to find sellers at some point. You can see these bear bars are all closing on their lows. So there's not a lot of, what's the word? Willingness to scale in long. If you're a bull, can you put a stop there? No, I don't think so. You're hoping we're going to go up here, but the better buy would be to see consecutive closes above the moving average, then a pullback, it holds, and then trade the second leg up, I think. So Tomic's saying this kind of major surprise bear breakouts is not strong enough to create its own bear market cycle. Yeah, so definitely. So we had spike, pullback. Now, this is the correct name for this is a reversal attempt. So this is a reversal attempt here. Now, we only call it a pullback when we start creating buy signals and going above, right? So at this point, it's a pullback. But now you've got spike pullback channel. I usually just hug it to the moving average. That's the simplest way to do it. And what do we need to break out of a channel? We usually need to break the swing points. We broke out of one here. We broke out of one here. This is incredibly strong. So that channel is probably cactus. Now we're in some kind of a range and the market's looking for direction, either up or down. Al says once you've got 20 bars, the probability is back to 50-50. So somewhere in here, traders were already positioning the sell to the low of this range, but also probably scalping some out and swinging the rest, because then they've got a really good risk reward. So break, come back in, and then measure move down. And now you've got the opposite. Now you've got a spike. So every new leg's a new spike. At the moment, this is a reversal attempt. But the maths on this saying that it's a better sell than it is a buy. But the sell's probably a scaling sell. A lot of bulls are trapped. Well, I'm not sure. I don't think anyone buying in here is going to hang on to that long trade. Usually in a trading range, you have a couple of legs, which the bulls have, and then as soon as there's hesitation or disappointment, it's usually over. Let's try and find a spike. Okay, so let's look at some of these spikes down. One, two. Now notice the sell signal was under a bull bar. That's what I was saying about you don't need a good signal bar in a trading range. You need location. One, two. One, two. Even here with the inside bar. One, two. So the shape of it is still a two-legged pullback. And what do the bulls need to switch it round? Look at this. So at this point now, do you really want to sell that bar under the moving average? Not really. Do you want to sell this bar? Not really. Do you want to sell this bar? Not really. At some point, it becomes really clear here. So a lot of swing traders look at this area here. I think, I mean, I can't confirm, but this is how I trade it. At this point here, you need to decide whether we're still going down or still going up. You've still got two counter trend legs, two attempts. There's a buy there and there's a buy there. Betting when you get a measured move up. The upper trading range, you're asking about the big bear breakout point. Sorry, there's a bit of a delay, mate. On the daily chart, weekly chart. It'd be good if YouTube had little timestamps on this one. I'll just wait a sec. Is this a major bear surprise? Yeah, it's a major bear surprise. Yep. So traders expect a second leg, and that's probably not it. But it's also, the maths gets better for bears up here. Small stop. Open gaps. So I think if we do go up, which is still possible, I mean, everything's possible in trading, it's going to zigzag. and it wouldn't take much for the bulls to give up, I don't think. Oh, here, trading range above, yep. Expecting a flag. Okay, so that's the bit I disagree with about the flag, because the basic premise in a flag is it's a breakout pullback. So usually breakout pullback high one doesn't work, breakout pullback high two, breakout pullback high three. Once you start having three-legged pullbacks, that's usually trading range time. Not always, but because the pullbacks are so complex, traders are not in a rush to buy the first pullback. Same when the pullbacks are deep. New high, deep pullback. Do you want to buy the high one there? I'll probably wait until see we get a breakout. What do they all do? They wait to the lower third to buy. You can argue the range is now larger. So on a lower time frame, they're flags, but it's within a trading range. And so in a trading range, you fade flags. So a bull flag in the top is a sell, bear flag in the bottom, it's a buy. I hope that makes it clear. And then strong bear breakout resets the market cycle. It's a shame there's a little bit of a delay on this live thing. Yeah, when the pullback gets complex, it becomes 50-50, and that's when you put your fib on the chart, and then you're really just making two questions. So I've got a fib here. I call it mixy because it's got the 50-50 and the thirds. But I use this a lot because I just ask myself that one question. Do I want the small stop? Do I want a big stop? Do I want probability or not? And you can see here, just not enough orders to get above that bar. Traders are saying, well, I'll buy in the lower half, I might buy in the lower third, but no willingness to buy up here. And at some point, when this has enough legs, 1, 2, 3, 4, once we start getting double tops, double bottoms, breakout mode, someone's going to get stuck. So we're either going to go, the traders have bought in the lower third, get cooked down. Traders have bought, sold in the upper third, get cooked on the way up. Yeah, that's correct. Yeah. So those bulls that bought in this lower head, that's okay, right? That happens all the time. You have a really small stop. If you're on an ES, you've probably got a 3 to 5 point stop, and sometimes you get 5 or 10 points. Sometimes, bang, you take a loss. But as soon as you've taken that loss, you don't then buy this. So I don't care about taking that loss because I'm in sync with what's happening. Great. Bulls just lost at the lower of that range. I definitely don't want to buy this bull bar. It's probably a sell. Wait for them to get stuck, either sell or sell. So the worst thing to do is say, oh, I'll just buy below the range and bet that it's going to close. Oh, that's okay. That worked. But then what happened with this one? What happened with this one? At what point do you give up on your premise? Got this open-ended catastrophic loss on it. All right, let's move across to FTSE. Let me just check. I've got that locked. That was the prior all-time high. So even if you don't trade FTSE, I think it's really useful to look at other charts and just see that all the price actions are the same. It's one thing for you to read that. The other thing is to actually, just trade it all the same. So we've got a tight bull channel. You can see already 1, 2, 3, lots of three-legged pullbacks. 1, 2, 3. And the chance of us breaking above this bull channel is low. You know, historically, you can now draw it like this to be accurate, but it doesn't really matter. At the time, you know, it's a bull channel, still 25% chance we go up here. Because on DAX, these two bars were massive, but FTSE not so. So I said in my weekly report, the fact that this is overlapping, that we gap down, is like, this gap should be the other way. This gap should start up here. There should be so many bulls ready to go. So that says, no, we're still in a channel. Wait for a pullback. Decent sell signal. Bears immediately got 2R and got out. So now bears that have had a swing down on the monthly chart, what are they going to do when the next sell signal pops up? Well, they're probably going to sell it. They got more than 1R last time. Why wouldn't they just sell again? There's no more gaps. So sell above on the monthly. I've kept this channel line there so you can see this distribution. Yeah, Atomic, exactly. When you give up no more scaling. So over the years, I've identified the little things in price action that I'm weak at, and I close the loop. So if it's possible to get stuck in a, just buy below and then just buy below and then just buy below, no, I just take that out of my trading. I get one shot. If it works, great. If it doesn't, bang, no more. Because if you add emotion and then you add money and you add time pressure, those small mistakes will become big gaping holes in your strategy, I think. So weekly chart, tried to break up. Now here was a reasonable buy signal. Nothing wrong with that. Nothing wrong with that buy signal at all. Yeah, we've got multiple closes above the all-time high. This can go up here, but we immediately go below that bar, and those bears can't get out. Sorry, those bulls can't get out break even. Yeah, they could have bought below and got out, but these bulls are actually trapped up here. I think they at least should have taken a loss down here. So those bulls gone. So if bulls buying above things just lost money, should you be in a rush to buy above anything? I don't think so. This was a bear spike that closed all the way back in this range. This has been a tight range for a long time. We got down to 8,000. I think traders that are buying down here are traders that do this. So they see this bear bar and they buy with a stop 1 or 2 times below, betting this is not going to go down there. So their actual risk is here, and their target's 84. So I think the bulls are going up to close some gaps and then get out. I think traders bought the moving average and got stuck. But on the weekly chart, I think it's tricky. It's tricky. It's the same thing with DAX. You've got a very large spike, and we're pulling up to the top third. So in order to buy there, I'd have to put a stop down there. So the mass is just not looking too good. So I'll just wait and see if the bears get something. I don't think that's a good buy. So a little bit more obvious on this chart. So we've got a bad sell signal. So that means if you look at that bar and think, man, this shouldn't have happened after that. That's a magnet. It's probably limit order traders scaling in. Even though I don't trade this way, I pay attention to who does. So they buy 1 range and 2 ranges down, betting there's going to be overlap. Okay, so you buy there, your average is here. So they're already making money. But what do you do as a bull here? Bull micro channel, yes. Bull bars, yes. Lots of overlap, and 1, 2. They'd need to get a couple more bull bars, pull back, stay above the moving average all next week. That would be the earliest I think I'd look to buy on the daily chart. I think same thing as DAX. It would only need one good bear bar to change everyone's mind. Atomic's saying, when we're getting a complex pullback, it's sideways. Yeah, there's no urgency from trend trade. Yeah, there's no urgency is the right word. So I can be bullish, but not so bullish I have to enter the market. For example, let's get out of that. So when this bar prints, I'm bearish, but I'm not so bearish I need to sell the market. I'm not so bearish I need to put an order below that bar. I'm bearish enough to say, well, I want to sell a pullback. That's not a good pullback. Yeah, it's okay, but it's an inside bar. So bears have not had a good pullback yet. And I think they'll get a chance to. Now that means the bulls want to do this. They want to run to the top of this spike, trap anyone that sells, and go up to a new all-time high. I think it's low probability. You need some big bars. If you look at ES, look at ES here. We had a sell. Bulls even got a couple of bear bars, bull bars, sell. Second entry short, sell. Second entry short, sell. They had to get all the way up here before bears, and they still sold below. You can still triggers. This is also 3 legs, 1, 2, 3. So they need to do a lot to get, where's it? So you can see here, climax. Can this be the low for the next few months? Yeah, but I think bears will get a chance to sell it. So that's my presentation for today. I hope you found that valuable. If you've got any other questions, I'll wait on for a couple of minutes. You're also welcome to find me in the Brooks Price Action Discord. You're looking for Tim F. I'm in blue. I'm one of the admins there. You can also catch me live trading in the Brooks Price Action Trading Room. I'll try and do some more Euro trading over the next couple of weeks. It's been tricky because I trade Hang Seng, and if I trade Hang Seng for many hours and then I stream Euro and then I trade US, it's just too much trading. So yeah, no worries, mate. You're welcome to send a note. Hope that was valuable, and otherwise I'll catch you all during the week. Have a great trading week. Volatility is coming down a little bit, but yeah, probably better just to trade small and not undo January, February, March's profits in one dud week. So awesome. Okay, cheers, guys. Hope you're well. Take it easy. Yeah, happy Easters. Thanks, Anders. I'll catch you all soon. Cheers.